All right, guys, let's go ahead and get started with the afternoon webinar today. It is February 11th, 2016. I wanted to check in with you guys, although I speak with a lot of you guys on a daily basis, but I thought it'd be good to do a little Q&A session today and sort of catch up with some of you guys that have been a little more quiet lately. Just wanted to make sure that you're doing okay in the market adaptation and not getting too caught up in all the chop here this week. So first thing I wanted to talk about today was a little bit about adapting to changing markets. So I've spoken with you guys about this many times before, but as you guys know, I've been trading for almost, I think, over 10 years now. I started in 2005, so just over 10 years. Makes me feel old, but I started pretty young and really early, so I've actually been through a lot of changes, and I want to talk a little bit about how those changes affected me and affected my trading and some of the hurdles I had to overcome to get past those changes. So the reason, obviously, I'm doing this this topic as our first topic today is because we're in a changing market right now. Things are drying up a little bit on the equity side. So the usual, easier, I call them easier, sort of easy money plays we've been seeing a lot of lately. Low float runners, small cap stuff getting pumped, and there's been a lot of easier trades lately, and there's been a lot of easy money the last few months. And it always seems like as soon as it gets a little too easy, and as soon as the money starts just flowing in and everything's just so good that you can't fathom it being any different, it's usually just around that time that something will change. The market will change, and this is where it's going to really test a lot of people, because one of the, having worked in a prop firm when I first started my first 4 or 5 years trading, I worked in a group in a prop firm in an office of traders. And the one thing that I noticed of the very few people actually that were able to continue trading through all the years I was there, was they were the ones who were able to actually adapt and change their strategy based on what the market's doing. So the people that tended to not do as well, the ones that would, there were some actually that had a lot of potential, so much promise, and you just think these guys are going to go to the moon. You're like, wow, you see these huge numbers they put up, and we see it on Twitter all the time. Huge days, and it just seems like they're unstoppable. And then they stop sharing their P&Ls, they stop posting as much. And you're wondering what's happening to these guys? Are they still doing okay? And the thing is, a lot of them are unfortunately they're newer traders that have had early success. So in the first 1-2 years of trading, it's almost poisonous to have too much early success, because what that leads to, and I've seen this time and time again from the prop firm, was we'd see guys that had a ton of potential, and they were almost fearless and just really, really good traders. And, we thought that they were really going to go far with it. And then what would happen is the market would change. And they're used to making X amount of dollars a day. So for the sake of argument, let's just say that, they're used to making thousands of dollars a day. And then as soon as the market changes and they're not making the thousands of dollars a day anymore, they're still wanting that amount of money, and they're still pushing every day. They're still swinging for home runs every single day, but the market's saying, you know what, things are changing here, and the way that you're used to making money it's not working anymore. So that was one of the biggest, points in my trading career where I noticed that, hey, this is a big thing. Being able to adapt to the market, adjust your strategy, and actually having the discipline to back off your trading size and allow yourself to readjust to a new strategy is, one of those things that's either going to make or break you as a trader. So I saw so many good guys actually bust out and just lose their minds and their accounts. And mostly it's because they didn't have the patience to learn a new strategy. B is they kept swinging for home runs every day and then compounded losses. So getting used to the problem is with making those huge numbers in the beginning is that you haven't actually been in the market long enough to deal with changes and to deal with adaptation, and to, if you get stuck in that mindset where doing the same thing is going to work forever, you're eventually going to run into a brick wall. So where my main strategy lately, and I'll talk a little bit about all the different things that I've done over the years in terms of trading strategies, and I've been all around the block from trading microcap TSX venture stocks under $1, everything from that to trading major Canadian bank stocks, and then of course Nasdaq's and New York Stock Exchange stocks as well. So and OTCs. So yeah, I mean, the biggest thing again is going to be about adapting and how you adapt to the change. So the way that what's been working best for me, and I think for a lot of us lately, has been trading small caps. Let's be honest, they're easier to predict. At least I've found ways that I found them extremely easy to predict. You guys are often like wondering how I pick tops, like 2-3 cents off the top a lot of the time, and we talk about the market maker tricks and how we spot those and use those to our advantage. We talk about the charting techniques. We're all accustomed to those by now, everyone in the room. But what we're running into right now is, as you can see, the last week in the market, I'm looking at the volume leaders, and they're mostly, like we're looking today at mostly gold stocks. Futures and ETFs are running hot, but the equities that I'm used to trading, that I've been used to trading for the last while now, I guess the last year really, I've been really focused on stocks sub $10 and been doing really well with them, mostly on the short side. But looking over the the percentage gainers the last few days, they've just dried up. The focus is now off of those, and it's kind of onto futures and ETFs and stuff like that. So the usual way that the way that I'm used to making money, at least for this week, it's not really there. So what have I done? As you know, earlier this week, basically I've traded less volume and less shares this week than I probably have in years now. So the plays that I'm used to seeing every day, and sometimes it takes a little bit of patience, like the biggest part of my game is I'll wait for those 2 or 3 perfect opportunities and then attack. And the biggest trading resolution I made in 2016 has been to have the patience to wait for those plays and not get too carried away, trying to pick everything, but just putting my focus into a few setups that are the most high probability, and that's what I've been focused on, and that's what's been working really well for me. Now, there's been very few plays this week. We did have a little something there on ELMD, but it wasn't too exciting. And today there's been basically a whole lot of nothing. So this week I've backed my trading off significantly. I think on Monday, Tuesday, and Wednesday I made between $200 and $300 each day those days, and it took a lot of patience and discipline to make those numbers. And the thing is, I'm okay with backing off my share size and making less in this market. I know right now that we're not in the booming market that we were in a while ago, and now it's time to adapt a little bit. And so for that reason, I'll back my share size off, I'll back my trading off a little bit, readjust to this market as best I can, and then help you all adapt with me. So I've been through a lot of changes. When I first started trading, it was mostly more higher price stuff. I actually didn't know what to trade. When I first started trading, I was pretty much blindly just trading whatever the volume leaders were for the day back in 2005. I was trying to figure out some strategies that worked. It took a long time. It took 4 or 5 months for me to even really figure out what I was doing. And I've gotten a lot of you guys in just a couple months way streets ahead of where I was in my first year or two of trading. So it's a huge leg up just to have the screen share each day, the commentary, the thought process that I go through, the morning watch lists, stuff like that. It's a huge leg up, to get the market maker tricks that I talk about, how I read level 2s in the tape, and like analyzing that and sharing it with you guys. It's basically like I'm just thinking out loud all day long, and you just soak in the information all day, which is a beautiful thing, and something that would have helped me hugely, massively in my first couple of years of trading. But I figured it all out on my own, and I struggled a lot, in the first year, two. Finally, when I would start to see some consistency, what would usually happen is I would take a big loss, and then it would just lead to emotional stacking of more losses on top of it, and taking a long time to recover from it, and basically starting over again, and just basically go on like that for a long time. So without getting too far off topic, if you haven't watched my YouTube video on the learning curve, I really think this is a good time to do it. Tonight, during this market, I'm just going to give you a quick preview of the chart that I built here to explain it. And what I was talking about just a few minutes ago, a lot about the beginner's luck, building confidence, making big money in the beginning, it can often lead to, let's say you start here, you deposit your first account, it can lead to overconfidence and thinking that it's easy, which is just the worst thing. I've always been able to stay humble. Just when things get too good, I'm ready for that change right around the corner that I'm going to have to adapt to. So when it gets too good in the beginning, it can honestly be the worst thing for you, because it just leads to exponential losses where you just keep increasing your share size, getting more and more frustrated, pushing more and more, and essentially you're just making the same mistake over and over and over again, which is the definition of insanity. And that's when the reality sets in. Maybe trading's not for me, you're thinking. I've lost my confidence. Maybe this isn't as easy as I thought it was. People do... I do find that I think that social media and a lot of trading sites, they do tend to try to make it sound easy, which I think is criminal. I mean, I think it's a terrible thing to make someone believe that this is an easy thing to achieve. Because yes, of course, you can get a huge leg up by being with the right group and by surrounding yourself with experienced and positive and supportive traders who've been through these markets can help you in a huge way. But it's really up to you at the end of the day to take the information, to apply it, to follow the rules and the strategies, and to adapt them into what you're comfortable with, and to take control of it on your own. No one's going to make it work for you. We can help you, but it's really up to you to put it all together. And one thing I love about our community is I think it's really one of the more supportive ones out there. And because it's a smaller community, it allows for a lot more one-on-one attention. And for that reason, I just love it. And plus, everyone's been really supportive of each other and helpful of each other. And I think that it's great in the beginning to have trading partners. I noticed a lot of you guys are partnering up, and the guys that like to trade certain types of stocks or indexes are sort of teaming up together. And then we have JB and Switchblade, who are both JB is the moderator in the room. He is a professional futures trader, and when the markets are like they are today, they're just on fire in the room talking about futures trades and ETFs and such. And then things are a little slower on the equity side, but it's nice to have that diversity in the room. So back to the chart I was just looking at. What usually happens, and this is what happened to me, I guess I didn't have the huge early success, which I think humbled me early on, and it was a really good thing. I kind of started out in this range here, but if you do end up taking this big dive and you've lost some money. Now the thing is, at this point, if you decide that you're going to continue on, you really need to just reset. You need to really reset yourself. If that means taking a week or two off and just stepping back and waiting for the market to correct itself, because again, we've seen changes like this. It wasn't too long ago, 2 or 3 months ago, we had 1 week where it just dried up completely and the market was a little bit wacky like it is now, and it only lasted a week, and then things started picking back up again, and the easy money trades came back. So hey, you never know. Next week things might be great again. Either way, we're going to find a way to continue making money in this market, and I've done it many times before, and I've got ideas going forward. So I'll share those in a little bit. But reality setting in, questioning trading, losing confidence, and then this is my favorite part of the chart. This is where you finally, first of all, I think you should reset, take that week or two, whatever it is you need to take off, or just forget about what happened back here. That's gone, okay? Just think about the future going forward. You've now, at this point, I hope, made some trading rules, some trading plans. We talk a lot about, trading with a plan, eliminating emotions by having a set trading plan for every trade. We don't add to losing positions ever, at least I don't. Only looking for low probability, high reward potential setups with low risk. That's all I look for. And I don't touch anything else. I really don't. Usually when I just have a really nice hot streak, I'll get a little too cocky or confident, and that's when I'll make a mistake. Sets you back a little bit. But lately I've just been like really, really being patient, just not letting those mistakes happen. And it doesn't matter if I'm profitable 14 days in a row or 2 days in a row. I'm looking at every day as a brand new day, a clean slate with a fresh screen and just ready to take what the market gives you. So try to refresh yourself, readjust. If you have to, like if you have to just get that out of your system this year, just wire out of your account or something and wire into a new one, a brand new account. Start with X amount of dollars and just treat it as a clean slate. Okay. Once you start to finally actually learn some trading rules and methods, and you're starting to find the way things are working for you, that's where we see this right here, where you're sort of making some money one day and then you lose a little the next, and you're kind of flatlining. You're making some, you're losing some, but ultimately you're kind of breaking even, or maybe you're losing a bit after broker fees. But eventually you're going to just sort of catch on to something that's working, and hopefully you start exploiting that. That's the whole key to profitable trading, is finding one or two things that works really well for you, and then being patient and waiting for those opportunities and exploiting them, because that's your niche. So finding your niche, you start to hopefully slowly, because I think this is the way to go. I've always been an advocator of consistency. If you look, like I've always said, I don't really like sharing P&Ls on Twitter, but I've started doing it sometimes just to show people what's possible in terms of consistency and stuff like that. But it's never really huge numbers for me. It's always like my in this kind of market, I'm more than happy to make between $300 and $600 a day, and you can do the math at what that works out to be per year. And I don't really care what other people are doing, so don't get too caught up in like a lot of people get, and I've seen it time and time again. They'll see these $20,000, $30,000 P&Ls in a single day, and they just want that so bad, and they can't handle the swings, or they put their whole account on the line for one trade. To me, that's insane. It took me 10 years to get where I am today. I'm not going to give it all back in one trade. And we've seen a lot of people, holding KBIO short from $2, their entire account plus margin, and lose everything in one trade. I've worked too hard and I've been through too much to throw away everything on one trade. My game is all about consistency. I love trading. I want to do it. I want to do it for the rest of my life. If I retired, I would be bored. So I enjoy trading as a hobby. I enjoy it as a career, and I really enjoy screen sharing, teaching, and just helping people that in the beginning, I needed the help and I just couldn't get it. Back when I first started, there were no chat rooms. There was definitely no live streaming. There was very few options. I don't think Twitter even existed when I started. YouTube might have just been getting started. But anyways, rebuilding confidence. So you're starting to make a few bucks here and there. Maybe you make 100 2 days in a row, lose 50. I've gotten a lot of guys in this room within a couple months on this path right here, which is awesome. I get so excited when I hear the positive results, and see that the strategies are working and that they're actually listening and taking my advice in terms of when to back off and when to be aggressive, and then just always having a trading plan and having a maximum stop loss per day. These are all essential rules in your longevity as a trader. So in this area, keep your eye off the prize. Don't be thinking too much about getting rich. The only thing that you should be focused on right here is the process of trading well. So you're learning, You're learning a lot about, in this area, you're also learning a lot about your trading psychology. So what you can handle and how you handle risk and how you react to certain situations. The only way to really know how you're going to react to a crazy situation in the stock market is when you're faced with it. I can, like I said, when I go to sleep at night, just like a lot of professional athletes do, they'll like think about what they're going to do the next day, like if they have a big game the next day, or a golfer, it's a golf tournament, you visualize the win. You think about how you're going to handle the pressure, how you're going to handle every situation that can be thrown at you. What if there's weather? If you're thinking about golf, what if there's rain tomorrow? You visualize. I think a lot of professionals do this, is you visualize the win, you visualize, you stay positive, and you basically have a little mental meditation before bed, and you wake up the next day refreshed, and your mind is in the right place to do the right things and make the right moves. So I kind of do that every night. I think about what I did. Basically, at the end of every day, as always, I say, here's what I think I did great. Here's what I could have done better. And you guys, we learn from everything. You guys learn from I don't just talk about my successes. I talk about the mistakes too, and all the trades that went well and the ones that didn't, and why I think the ones didn't went bad. So we can all learn from them. And it's a huge, huge, valuable learning tool. So rebuilding confidence, learning a little bit about yourself. You're learning what you're comfortable with in terms of risk. You are learning how to trade a plan, how to cut off the losers, let the winners run. Look, it's starting to go well. You're slowly grinding your way back up. And I like this chart, To me, this is a better chart than just a huge breakout, because usually if you're not ready for that huge breakout, like in the beginning here, you just get caught up in the money. You're not thinking about the trading process. You get greedy, you get impatient, and it can lead to compounding losses. So once you start to consistently make the gains here, eventually, unfortunately, you're inevitably going to have one day where you don't stick to your rules, or something beyond your control happens, like a halt or just some bad luck. But generally, it's usually something to do with just your mentality. You're starting to do really well, and then you want to step it up, and you get a little greedy. You have that one day that wipes out, let's say that this is 2 months. Well, think about psychologically where you're at when you've spent 2 months building up this X amount of dollars. Let's just say, for the sake of argument, $5,000. And you lose $3,000 of that in one day. So you lost 30 days of work in one day. Now, you put yourself there mentally. Maybe you've been there before, but you're not going to know how you're going to react to that until you're in that situation. Now, this is the most pivotal moment right here. This is the most important part of that seminar on YouTube, because this is the point that I noticed where a lot of traders in the prop firm in my early days, and the guys I see on Twitter, and a lot of people end up busting out. This is the pivotal moment. It's how are you going to react to that day, that one day where you really get slammed. Here's how I deal with, and how I've always gone about dealing with, well, not always, but at least in the last 6 years. After a big losing day, it's devastating. First of all, if you need to take a couple days off, take a couple days off, okay? But you need to refresh your mind. You really do need to reset, readjust, recalibrate, because this is the most important moment in your trading career. Either you're going to move forward with a positive mind frame, a positive attitude, and an adjustment to make sure this never happens again, whether that's a maximum daily stop loss limit, whether it's not adding to a losing position, whether it's trading outside of your niche or not being patient enough to wait for those setups. You need to make that necessary adjustment and realize that it took you 30 days to make that money, it took you 1 day to lose it, and it is going to take you 30 days to make it back. All right? Now, the biggest mistake people make is because human nature actually wants you to, naturally, you're going to want to make this back as quickly as possible, because this is pain. As humans, when we experience pain, we instantly just want to alleviate it, whether it's by, taking a pill or something like a Tylenol for a headache, or whether it's a loss. Whatever it is, you want to counter it as quickly as possible to get those negative emotions away and put it behind you and feel better again. So what a lot of people do, unfortunately, is at this point they will double or triple their share size the next day and just try to make a big score to make it all back in 1 day, or to make a big chunk of it back, which unfortunately 95% of the time just leads to compounding losses, emotions, revenge trading. You're not ready for that kind of size. You're already emotional about the loss the day before. You can't handle the swings, and you basically compound your losses and end up losing your entire account. That happens a lot, and I don't think I know any successful trader that hasn't blown up an account in their early days. It's how you learn. But I'm hoping that this seminar will help avoid that altogether by focusing on this pivotal moment right here. And instead of doubling or tripling your share size and fighting back, emotionally, just realize that, hey, I'm a X amount. Let's say you're making around $100 a day here. I'm a $100 a day trader. I'm a newer trader. I'm a $100 a day trader, and it's going to take me 30 days or maybe less. Things start going well. You start to build it up, and you can increase your share size a bit as you go. But, I lost 30 days worth of work in one day, and now it's going to take some time to make that back. Or I can compound my losses, get emotional, revenge trade, and basically end my career before I even had a chance to get started. So don't let this one moment right here ruin you. I really highly suggest that this is what I do, is almost every time that I have a losing day beyond my usual stop limit. So let's say that you say like, okay, for you, let's say that your max stop limit for the day is $200. If you hit $200 loss, you need to stop, because let's say on average you make $200-300 a day, and you don't want to spend 3-4 days recovering this loss. You just know it's a bad day and you need to move on. Well, what I normally do is when I have a bad day like this, the next day the only thing I'm trying to do is put in a green day. Whether it's, even if it's just 50 or $100, all I want to do is back off the share size, get patient again, focus on the process, and just put in that green day to get me psychologically back in the mental place to start putting together a string of good days again. So I very often, after a big losing day, I'll come back, use about a third of the share size I was using the day before, be extra careful, extra cautious, trade only the A+ setups, and I'll put in a $100 or $200 day just to get myself back on that train, back on this nice climb. And I'll just slowly build it up. And then, you'll have a day here or there where you slip a bit, but keep the loss small, and just build it up bit by bit. As you start to climb up this ladder, just slowly increase your share size, only on those A+ setups, your favorite ones, always limiting your risk and always being safe. And eventually, something's going to click, and you're just going to get more and more confident. Maybe you're going to start, using the moving averages more that we talk about, or using, the support and resistance levels and stuff like that. You found a way that gives you confidence to make money in the market and pull the trigger when you know the time is right, and you're starting to up your size a bit, and that's when you're going to start seeing some consistent success in your trading. So I kind of went off on a tangent there, guys. Adapting to changing markets. So I've been through it all. I've done, like I said, I used to trade higher priced bank stocks, financials, and then in the 2008 market crash, I really started short selling things, and it was almost too easy. I did really well in 2008 because I was a day trader and I was just getting into short selling, and I would just basically pull up the financials stocks every day, and short them, and it was almost too easy. I don't think there was even I'm pretty sure there was no short sell restriction. It was just a total chaos. And as a day trader, as an investor, it was a nightmare. As a day trader, it was almost a gift. I did really well in 2008. And it was my first really, really big, decent year since I started in 2005. And then things were okay for a couple years, and I was starting to, put together my strategies, my rules, I started experimenting with, moving averages is what's always resonated with me, and allowed me to get the confidence to, buy into fear, sell into greed, go against the herd, stuff like that, which has really, really increased my profitability in that. So, but 2010 was another pivotal moment. The reason why is because I believe it was 2010 where there was a huge influx of HFTs, algorithm trading. Big board stocks started to just go crazy with these algos. And the way that I was used to trading and making money on a 1 minute time frame was just not working anymore. And again, about a third of the guys in our office busted out in 2010 because they just couldn't adapt to that change. They just couldn't get it. the patterns that we're used to seeing stocks break out in, HFTs and algos would hammer them down, 20 red candles in a row, shake everyone out, and then break out, and vice versa. It was just a total 180 in the way that we were used to making money. It was a huge adjustment to make. I struggled for a while in 2010 with that, and I was trading mostly big board stuff. And eventually, what I ended up doing was I ended up switching to longer term time frames, 5-minute, 10-minute charts, 30-minute charts. Got rid of the 1-minute noise, and I started doing a bit better. But I still wasn't making a huge amount of money doing that. I was able to make money, but I still wasn't doing quite as well. I found that the HFTs and the algos made it quite a bit harder to profit the way I was previously on those types of stocks. So then I opened the next door, which was OTCs and TSX venture stocks. And I've told you guys before about the sub-dollar strategy that that my friend in the prop firm had basically invented, and me and him mastered it together, and then we really went on and did really well with it for a couple of years. And it was so easy. I mean, I don't want to get into that because it's just wasting time with only 20 minutes left in the market. But I told you guys the story before. Really interesting, crazy strategy that worked for a while until the market took a dive again, and then it dried up again. So there's been many different pivotal moments where the market has changed in a way that I've been used to making money or that I've done well is no longer working. And I've had to adjust, and I have every time. Sometimes it's been easier than others. But it's always been a challenge. But what I've noticed is that the longer I've been trading, the more I'm able to recognize early on when I need to make the change. Like this time in the last week or two, I haven't really, I haven't lost anything. I haven't been making as much, but I've been very defensive. I'm at a point right now where I'm like, okay, well, this week is slow. Like I've told you guys, we're being a little more careful right now. We're seeing how the market's reacting. This week, I'm sort of just gauging things and trading here and there where I see opportunity, but mostly protecting capital because, hey, let's face it, a lot of the time, no position is the best position, all right? I mean, I'd rather, make hardly anything one day and then come in the next day and nail it than, lose a few $100 every day for 3 or 4 days, and then finally when the market's good again, you're just making back that loss because you were too impatient to wait for the good setup. So adapting to changing markets, guys, it's not easy, but surrounding yourself with people that have been through it all, that are supportive, having a supportive community and core of people around you, it definitely will help. And just having encouraging words in your ear every day and ideas and highlights of what things we can do to overcome will really help and work really well for you. So let's talk a little bit just really quick about, I touched on it a bit, but max loss limits, trading a plan, eliminate emotions. So we talk about this. This is not an uncommon subject for you guys in the room. But just to be clear, I mean, trading a plan is really the best way to eliminate emotions from your trading and to, actually stick to a trading plan and show yourself that you can do this. So again, the guys that have been doing the best out of the newest traders in the room are the ones that have actually been following that advice, and they've been creating realistic trading plans, and they're trading small size because they're newer, and that I cannot commend enough. That is the way to do it. To get the proper leg up is really to start small, so that you can prove to yourself and show yourself that you can commit to a trading plan and that your trading plan works more times than not before you start, increasing the size and putting real money on the line. So some guys have just hung out for a month or two, paper traded for a month or two, and then said, okay, it's time to open. And then they opened an account, started small, and they're doing really well, I've warned them, this week we've backed off the trading size. We've backed off. We've been a little more patient. I think that, I'm really glad to see that we've all been staying safe in this market, not letting it chop us up. But for example, how to trade a plan and how to eliminate emotions from your trading. So let's say that I'm looking at VHC and I'm thinking, I want to be short for the support break. You can see the 675. I marked the support from earlier today. Let's just say for the sake of argument that, and just for the sake of this example, that I want to be short, although I'm not sure that I would want to because we got higher lows forming here. But just for the sake of argument, guys, let's say that I'm looking for a lower high to form on the 50 EMA. I'm anticipating that this is going to put in a lower high. Okay. So here's the high, lower high, and I'm anticipating this lower high, and then ultimately a breakthrough of lows for a nice fader. So let's say that that's the plan. If I get short right here at 84, and let's say my plan is, obviously if it breaks the top here at 90, then it's putting in a higher low. I need to get out, right? So I'm going to set my plan to short VHC at 85, and I'm risking 5 or 6 cents, we'll say, off 691. Now, what I need to ask myself is, what am I comfortable risking on this trade? Maybe as a new trader, 20, 25, 30 bucks is all you want to risk on it. And here's the way that you're looking at it in terms of risk versus reward. You're thinking, okay, well, if I short 500 shares at 85, I am risking 30 bucks if I stop out at 691. But if it does break, below this 75, it's probably going to give me at least 65s for half or 3/4 of my position, and then I can let the rest ride. So, I'm risking 25 bucks, but my potential reward is between $80 and $120 or even more if you decided to, for example, hold the position out as long as it's in trend, like you can see here, holding the 9 EMA and just in a nice trend. So you got to ask yourself, what are you comfortable risking? And don't lie to yourself. Be honest, because if you tell yourself, well, you know what, I'm comfortable risking 300 bucks here, and then you short a few thousand shares, and then when the stock hits 88, you just panic and cover and take a $100 loss. Well, and then only for it to actually turn around and roll over because you couldn't stick to your plan. That's really not helpful. That's why it's so important, I think, to just stay small and just show yourself that, hey, look, I made a trade plan. I had a set risk level. It made sense to make this trade because I was risking X amount of dollars. The potential reward is X amount of dollars, 3 times the risk or more. And and for example, this setup is one that I see all the time, and this one works, more times than not when I trade it. Give yourself reasons like that to make a trade, and just by actually having that trade plan, that stop loss limit, and when you know that, for example, you're risking 30 bucks on this trade, well, you're already mentally prepared for the possibility of that loss. So what that means is that it means that in your mind, you've already prepared yourself. For if this trade goes wrong, I'm going to lose 30 bucks, but that's okay because this is the plan. This is why I think it'll work. And more times than not, this is going to make me money. And then you have no reason to be emotional. You can really just let the trade work for you. It's really funny. Sometimes just backing your share size off, you start to make more money. Why is that? It's actually because, you're less emotional. You're actually just letting your trade plans work. You're not panicking and like you're not just overly emotional about each and every tick. You can just finally let the trade work for you, and it can do wonders for your trading. So if you're struggling right now, you're looking for a piece of advice, maybe just try backing off the trading size a little bit and seeing if you can just stick to a trade plan and just let it work for you that way. And then once you start to see consistency again and you start to build up some cash in your account from doing that, slowly increase it again until you feel uncomfortable. And then when you feel uncomfortable, back it off. I mean, at some point you do have to get out of your comfort zone a little bit to, progress in this game, but just do it when the time's right, when the market conditions are optimal and you're really seeing a lot of success in your trading. Guys, it's amazing how much I can end up talking about trading psychology. I mean, I could probably go 3 hours and I wouldn't even realize. Next thing you know, it's 8 o'clock. So I'm going to move forward since the market's closing soon. And I would like to do a quick Q&A session. And this is going to include anyone who's not in our chat room, but just watching. If you saw the post on Twitter and you're just checking out the screen share for the first time, there is a chat in the Zoom program that you're using right now. You can message me on there if you have any questions. I can, I'll definitely be happy to answer. If you have any struggles right now as a trader, just, let me know. I do love talking about trading psychology. I'm huge on it because, psychology to me is a huge, massive part of trading. I have technical trading is my biggest, one of my biggest things is trading technically. I trade price action over anything, and I'm a very technical chart kind of guy. As you guys know, I have my system, it works for me, and I do tweak it here and there, but ultimately, I have something that works, and I get a really good read on these stocks, and it's a mixture of, tape reading, price action, level 2, but mostly charting. So I did have one question, Alpha Trader. How can you tell when a breakout will fail? And I wrote 2 points down to remind myself, because these are two really, really important points, and we talk about this a lot, is time of day. So generally, the setups that I'm normally looking for, and obviously these longs are much better in a bull market. But let's take a look at CRTO, just because I was just looking at that chart and it kind of looks like, it's forming a bit of a cup and handle here on some higher lows. So what I do is when I see a potential long setup, you guys notice it on the stream, I'll put a line to indicate the breakout level to show, for you guys and for me, because later on, tomorrow, if I'm looking at the stock, I'm going to remember that there was a support or resistance level there. So I really am big on marking my charts. I'll put a line where I think the support is, or the stop out area, and then I'll watch for a higher low. So let's just say, for the sake of argument, and just to be clear, I'm not really going long anything in this market, especially because I'm more of a short bias trader to begin with. But let's just say that I like this for a long, and the breakout level is 33.40. The support level is, basically 33. We got some higher lows forming, a nice trend forming here. What I'm going to look for is to get in on a dip, probably around 315 to 320, but leaving room in case it retests that 9 EMA line. You can really lower your risk this way because, for example, if you start in a third size, let's say at 33.18, keeping the risk really low, if it breaks 33.10 and it just breaks trend, then you can just get out really quick for a micro loss and it's no big deal. But if I get filled and then it starts to look good for a breakout, I'll look to add just at the last moment when I'm anticipating. I'll look to add to the position, increase the average price a little bit, and then on the initial breakout, I'll look to piece some out into the first big volume push, and then I'll hold a little bit of a core position and see if it continues to trend, and then I'll sell it. I basically buy into the selling pressure, and I sell into the greed, which is when people are chasing the stock, is when I'm selling it to them. And that's one of the biggest turning points in your trading, is when you get the confidence to actually buy into selling pressure with a plan, obviously, with set risk and minimal risk. Start small, have a plan. You know this pattern, this setup, that a lot of the time this 9 EMA is going to hold. You start in small, add to a winner, sell to the chasers, let them get caught with the high price stock, and then, so that's my main thing for that. But one thing that I do focus on a lot is time of day. So I do like breakouts early in the morning. I like in a bull market, I love late day breakouts. That used to be one of my favorite plays, and I have that the TSX Trader playbook that I bust out, and I show you guys, hey, here's all the plays that I use depending on the type of market. Here's the end of day plays that I like. Here's the pre-market plays, stuff like that. So the time of day is huge for me. In a bull market, I used to absolutely love stocks that. Here's a good example of how these used to work really well. Stock has a huge rip in the morning, and then mid-afternoon the sellers come in, and mind you, this has not been happening in this market, but in a bull market, you get a nice rip in the morning, the stock settles down, just around lunchtime the sellers come in, take some profits, and then if it holds that 50 EMA in the mid-afternoon and starts to grind, that's where I'd like to get long, and I would just take a small position, and if throughout the day it starts to grind and it looks great, You have that core position, and then you can anticipate the big cup and handle breakout at the end of the day. Those used to work like a charm all the time. You know, it's one of my favorite plays, the end of day play, the mid-afternoon scoop, and then anticipate the end of day breakout, add to the position for the breakout, sell it into highs. Used to work all the time. I haven't used that trade in such a long time. It's crazy, you know. But that's a good example. You know, I'm looking for the time of day. The volume is really important. So I'm looking for increased volume, you know, in the last hour of the day to, as the stock's grinding up here and forming the cup and handle, you want to see that increased volume to give you the confidence people are actually buying it. I'm watching the tape. But ultimately, I think that a lot of breakouts tend to fail mid-afternoon. So I always talk about this. Don't trade mid-afternoon if you find yourself losing money or giving back to the market. I don't really play longs in the mid-afternoon unless the stock's really strong in this kind of market. And generally, I don't put as much size in cup and handles, the classic long setups we use, unless the time of day is right and the volume is right. So how can I tell when a breakout will fail? Generally, it's going to be either the time of day is wrong, the volume's decreasing, it's not sort of increasing and you know, pushing up with the stock. And another thing would be, like, for example, if it put in a lower high, for example, if this stock was to put in a red candle at 33.10, and then the next candle tests up on 20, 15 to 20 and fail, and then start to head lower, then I know, you know, I'm pretty confident at that point that the trade's not going to work. Exit for a flat or a micro loss, and just move on to the next. So there's a few things there, but my biggest number one, just like Koenig said, is I don't trade the dead. I don't trade the afternoon lull. In my early days, I made that rule very early on because I used to make a couple $100 every morning at the prop firm when I was in my early 20s, and then next thing I knew, I would be trading in the mid-afternoon, and I'd give back 150 plus another 100 in fees, and then I'd be really frustrated and emotional that, you know, that I gave back all those profits in the morning, and then I'm just fighting back emotionally all day. I don't play that game anymore. I make most of my profits in the first 2 to 3 hours of the day, and then I look for 1 or 2 good trades late day to add on to that if I can, without risking too much of the padding I made in the morning. So, yeah, I don't trade the afternoon lull. I like to stay away from that for the most part, unless there's a low float run or doing crazy volume or something that's, you know, enticing me to actually give it a shot. But the problem with the afternoon lull is the market makers take control. With the lower liquidity and the lower volume, it makes it a lot easier for them to push the stock around, take advantage of day traders, and ruin your day. So I need that volume that's sustained. You know, I prefer to have that momentum and volume on my side as you get in the morning, early morning, and late day. Let's move on to the second question. In buying washouts, what do you look for? Well, buying washouts isn't my favorite type of play. As you know, I'm much more prefer to short over extended charts, but I do buy washouts sometimes when the time is right. I'm looking for a few different things. One is prior support and resistance levels. Let's take a look at VHC again. I'll look at prior days support and resistance levels. And again, you can see in this market buying washouts isn't really working too well. But for example, if the prior day's 710s were holding, the next day I'd be looking for 710s to possibly hold again. What would get me in the trade is potentially if, for example, 710s were holding, and then it starts to grind up and it's putting in higher lows, and then you say, okay, well, I can get in small right here. I have a clear risk level, which is below 710. I'm only risking X amount of dollars. And then you're looking for the trend to actually change. So I'd be looking for it to grind up a bit, but I wouldn't be adding any size until it actually formed that clear cup and handle breakout with support over the 50 EMA like that. And then I'm looking for that. Okay. So if I'm buying washouts, I'm looking for basing and support levels. So clear signs of basing, action, or support from prior days. Higher lows, I talked about that forming on the 1 minute and or 5 minute chart, really. The 9 EMA break reversal is probably my favorite indicator. Generally on the 5-minute chart, it's hard to find a good example on VHC right now because the stock's just been nothing but chop for a few days now. But TRXC has been kind of crazy too. But remember when it washed out really big yesterday? Okay, remember this big washout yesterday? I did pick up a few. Where was it? It's right at 40, yeah, right just at around 44, I think, yeah. On this day, actually, it was on TRXC. But here's where I look for the reversal on those washouts. And again, this isn't my favorite kind of play because it's not the most high probability trade. But if you're going to do it, you know, what I like to look for is, see this white 9 EMA line? We talk about this a lot. It's when it actually gets back above that and starts to trend with it. You notice that as soon as it broke over that on the 5-minute chart, it actually held trend. So if you technically just waited for that to break and got long 382, sure, you didn't snipe the bottom, but you also didn't get in at 382 and lose 50 cents and $500 trying to chase a bottom, right? So you actually waited for the reversal, got in, low risk. Here's where I would risk off clearly, right on this chart, very clearly. I like this trade, actually. I'd be risking off 370, over under, getting long around 382 on this 9 EMA break. Let's say you had to chase it a few cents to get in maybe, but ultimately your trade plan here is that you're comfortable risking 82, 72, 68, 14 cents. You got to use your share size accordingly to what you're comfortable risking. It's not the highest probability trade, at least for me. I wouldn't be sizing into this one, but I'd be taking a small position perhaps. And then as soon as it starts to actually hold that trend, you can see that bull flag form here, right there. Just let it ride, Maybe add to a winner if you're really confident on a dip. But here's my indication on where to sell right there. That first, or maybe here, but generally that first 9 EMA break and hold under or lower high on the 5-minute or 1-minute. So I hope that helps. That's what I look for. Those are sort of things I look for. So the market is just closing. I'm happy to stick around for a few minutes if you guys want to just chat, but for those of you that are just joining us, my name is Jeff, also known as TSX Trader. If you're following me on Twitter, I try to keep that account as active as possible, but I am live streaming my desktop all day long for our traders here and providing support and help for our community. And yeah, I think one thing that you'll realize really quickly, especially while listening to this webinar, is that our goal here is not just, we're not an alert service. We're not just, I will give trade ideas, but I teach everyone how to create and form their own trade plans that they're comfortable with. I will explain, pre-market, I look at 6 stocks that I think have the most high probability to move during the day. I give general trade plans on what I'd like to look for in those, the important support and resistance levels. We look at the chart together. We look at the levels together. I give a few possible scenarios and how I'll react to them and trade them in the morning. And then as the day unfolds, I'll generally talk about what I'm trading and what I'm doing and seeing. But it's not, this isn't the type of service that, I'm just going to say, hey, get long this, get short this. It's not a front-running service. It's not a crazy high-volume subscription service at all. It's a very intimate group of detailed and dedicated traders that are, helping each other and committed to longevity in trading. And, I love working with people that actually have the right attitude going forward. They're not, trying to get rich today, but they want to build a solid foundation in their trading, and they want to do it the right way so they don't get caught up in that chart I was showing you. They don't want to get caught up in that learning curve chart where they follow a few alerts, see some early success, and then start to realize they're getting front run, and then the alerts aren't working anymore. So I really think it's important to teach a solid trading foundation, and I think that this is the best way to do it, hands down. I thought about making, and I think I probably will make, I don't even want to call it a DVD because I won't sell it, but it'll be free for everyone in the room. Just my playbook, a few hours, probably 8 hours plus of explaining, trading psychology, all the trades and plays that I use, risk management, stuff like that. It really is quality over quantity, and it really is a service dedicated truly to those that actually want to eventually become independent traders, not depend on someone else to make calls for them, but In the beginning, I think it's really great and really important to watch my calls, to watch what I'm doing and listen to my commentary and absorb it, soak it in, and get a feel for what I'm doing and how I'm trading these stocks and how I analyze these stocks and how I manage the risk, so that will rub off on you, and in turn you can ask the right questions, get the right advice, get the right support behind you to start doing it yourself. But like I said, the guys that are doing the best in the room are the ones that started small, are trading a plan and slowly increasing it and following all the advice. Let's see. No questions in the... And I might have picked a bit of a slow day to do this today, but not getting any questions coming in on the screen share, so I guess maybe we'll just leave it at that for now, guys, and we can pick it up again tomorrow. We basically do, some form of webinar every day. I mean, I'm live streaming all day long, so as things happen and unfold, I'll share live lessons and experiences, and I'll trade, and we'll talk about my trades and everything in between. So, it's not like a webinar once every 2 weeks. It's like basically a webinar every day. You can get your questions answered here, and you can get the support that you need. So as for all you guys that are in the room, as always, I really want you to continue to reach out for me. Get the support that you deserve here, and we'll just continue to grow and prosper together. And I do think that we're in a bit of a tough market right now, but very well could be like by next week or a week or two from now, these low float runners can start going again, and the easy money could come back. Either way, we're going to adapt and adjust, whether it's trading a little less and just being a little more selective, or just following JB more in the futures trades, because he's an awesome trader, and he's one of the most patient and methodological traders I've ever met, and and he's got some great strategies. So maybe I'll get into a little bit of futures trading, but mostly I want to focus on equities, and I'll probably just start focusing on the more higher price stuff again if that's the case. But either way, I think that we're going to get through this little blip in the market, and things are going to go back to normal pretty soon. All right, guys. Well, I hope you enjoyed it. I hope you had a good day today. And again, if you have any questions about anything at all, if you just want to reach out to me and whatever it is, if you have just questions or you want to just chat about the market or just say hello, you can reach me at tsxtrader@gmail.com or jeff@livestreamtrading.com. Thanks again, guys, for joining the webinar today. I'm sorry we didn't have a little more time. I really want to go longer with this, but maybe I'll open up another free webinar tomorrow or next week. If you're curious about what we do here at LiveStream Trading, if you want to get a feel for what it's like to be part of our group, you can actually just get in for a 7-day free trial. It's 100% absolutely free to try us. To be perfectly honest, if we were just running a chat room here, it would be free. The live streaming, it takes some effort and energy to do this, but I do think you'll find a lot of value in it, and I do think you'll enjoy it a lot. So give it a try for free. I'll give you a full week. If you need 2 weeks, just let me know. Just I'm open to letting you try it and trying our community out, because I think that a lot of people just haven't quite found their place yet. They haven't quite found the community that fits for them, and a lot of people have found that here. So if I can help you find a place that you're comfortable trading with people that you want to get to know a little bit, have some trading partners, and people with really realistic and positive expectations and stuff like that, I really think that you will probably enjoy this community. So why not just give it a try for 7 days? Fire me an email if you want to try it out, or just go ahead and sign up right here. You can simply cancel it before day 7 if it's not for you, and it won't actually charge you anything. So it's 100% free to try. I'll show you exactly how to cancel it should you decide not to continue. Just go to edit profile on the members portal, which will open up once you sign up, and then you can simply just cancel Stripe or cancel PayPal before day 7. It will not charge you. I can promise you 100% that. And why not? Give it a try, see if it improves your trading. If not, I think you'll at least meet a few good friends and have a good time for a week. All right, guys. So I'm going to leave you with that. Again, thanks for everything. Thanks for being an awesome community. Thanks for sticking around a little later today. And hope you guys have a really good night. And I'll be sure to post this webinar up on the website so you guys can review it, as always, and use it to continue your trading education in case you missed it. All right, guys. Have a really good night. We'll talk to you soon. Cheers.